Hello everyone, this is Jason. Hope this video finds you doing well. It is Saturday, February the 16th, 2019. We're going to do a market review, weekly recap, see what happened in the market this week, what we think is going to happen going forward. If you're new to the channel, please subscribe. And if you've been watching the videos, give me more dialogue, more content. If you like what I'm talking about, tell me about it in the comment section. If you don't like or you disagree or have a contrarian view, tell me about that in the comment section. So let's get dialogue going and let's make this a thing. I make the video and say whatever I say and you throw something back at me and tell me what you think, please. All right, as far as the video goes this week, let's take a look at S&P. I've been saying I'm a broken record for 3 weeks, and it appears I'm going to be a broken record again this week. Looking at the market now, 2 weeks ago, these blue lines represent weekly support or resistance. Typically, what I do is the way I set my chart up is I go to the monthly chart and I identify support or resistance on the monthly chart. Then I go to a weekly chart, identify support and resistance on that chart, and then I impose those onto the daily chart, which I trade off of. So the blue lines represent weekly support in this scenario, and the red lines represent monthly resistance. Well, previously, the blue support lines were actually resistance up here. Price made it to that area, went sideways a little bit and broke out of that area, and on the weekly chart the polarity changed to up. So our overall market direction is up. On this daily chart, you can look at this time to mark supply line, or demand line, I'm sorry. No, this will be a supply line. It's still pointed up. All right, so the market is up and there's support down here, but we're at monthly resistance. But it's taken its time reversing. So I'd be very cautious buying in this area. Now, when I say buying, this is a cumulative of 500 individual stocks. So if I was trading this exact stock, the SPY itself, then I wouldn't buy it here. And I would have missed out too. You know, I said I wouldn't buy it basically from down here all the way to where we're at, and it's just done nothing but continuously go up. And I've missed those trades, and I'm okay with that. I did go short on this stock right here, I think on this candle, this red candle here last time, or I have to pull it up, or maybe it was here on this blue candle. But I did go short one time and I won the trade, but then the market still reversed and I was still wrong about the direction. So I made it out of the trade unscathed. So I've only traded the SPY one time in the last, I don't know, 2 months, and I won the trade, but this direction is still continuously going up. And as it stands right now, it's still up. But still, with caution, let's look at a weekly chart. We're in a resistance area, and you don't want to forget that. You know, sometimes we can look at, it's been 8 straight weeks of the market going up, and sometimes you can lose perspective like, yeah, this thing is going to continue to go up forever and ever. But if you look at this move, there was a huge 20% move down on the market. And this retracement has gone over 60% of the way. I mean, we're now retraced. This is 78.6 and this is the 61%. So we're at around, I don't know, close to 70% of a retracement here. I don't know if this is going to measure right if I do it this way, but let me see. Yeah, that's not going to measure. That's going to measure based off something different. But this is about a 70% retracement where we're at right now. So this historically is an area where you have to be very careful to do any buying, because you normally get some type of a reaction. Like if you look at this move here that came down and made this low, kind of broke the polarity of the direction of the market at the time, it retraced about 78% and then it dropped. And typically what's concerning about this move up is the lack of retest. You know, typically when you have a move this large, there's almost always a retest. And we have no retest. It's just gone straight up. And just look at how rare this is. This is the weekly chart. If we pull back, and anytime you see a really large correction, like here, there's the retest. Here, there's a correction. There's the retest. I mean, when you see really big moves, there's typically going to be some type of a retest. Here, and it retested that bottom here. And now we're all the way back to 2010, and you know what's going to happen in 2008. The large move here and then the retest. It's just you typically get a retest. So I don't know what the overall direction of the market is going to be long term. I believe it's down based on some of the fundamentals of our economy and the I don't know, the some of the metrics. I mean, we've been in a really, really, really long bull run. You step back out to a monthly chart. This run has been going since 2009, early 2009, and this represents one of the longest runs in history of the market just going up. So you combine that with some of the political issues and just all the different variables that go into some of the macroeconomics, you know, the slowing of the economy, the situation with our credit and the credit cycle. It's just, there's a lot of variables at play that lead me to believe that this is the beginning of a longer downward move. So we'll see. But as of right now, how we trade that day to day, because where it goes long term doesn't really matter about Monday, for example. So right now we're in a resistance area, but the market is in no way adhering to the resistance. And it's been moving very, very strangely to me, because all the movement I've noticed has been pre-market mostly. We haven't had a lot of volume in the intraday trading session. Most of the movements are happening pre-market. Like if we zoom in on this price action, here we had a reaction and it gapped down. The volume of the day, or the range of the day, was very small. And then from here it gapped up. The range was, you know, whatever. Gapped up, gapped down, gapped up. So a lot of pre-market movement. Now, a lot of that could point to some form of manipulation. 2016, it looks like we were on the precipice of a recession, and there was large inserts in the trillions of dollars of cash added to the market that to prevent the recession. There's a lot of dispute as to where that money came from and who exactly inserted it. It's something you probably want to research. I don't want to get into conspiracy theories or whatever, but it seems to be a lot of this movement is pre-market, and you know, there could be some form of manipulation because there doesn't seem to be commitment by the people trading it intraday one way or the other, up or down. But the movements are typically determined pre-market during the day. So it's been interesting. It's a strange market, but you know, the reality is these individual days only matter so much in the grand scheme of what the market's going to do. And you don't want to lose sight of the bigger picture. So right now, all that's really happened is we've come down 20.2%. We've retraced about 60 or 70% of that move. And now we're just waiting to see what happens next in the market. Polarity is currently up. Direction on the daily chart's currently up. And I mean, it's not without the realm of possibility that it can come all the way up and test, you know, that 282 area. I mean, right now the market's pretty strong going up. And whether it gets there by pre-market movements or intraday volume, it doesn't matter. It's the market's going up. So me personally, I've taken I've had a couple trades that are bullish, but I trade what's in front of me, and my charts are reading down. So most of the trades I've taken over the last 2 weeks have been sell positions on individual stocks. I haven't sold the S&P except for that one instance, I think, back here, but I'm trading individual stocks, and I've got a bucket of about 80 of them. And I said the other day that I think that one of the reasons why the market is having a little bit of indecision is there are a lot of stocks that are in the middle of the trading range. Decisions are typically made at major support and resistance areas. And so I found that there are a lot of stocks where you're just in the middle of the range, which makes it very difficult to pick a direction. People have very low convictions in the middle of ranges. You can be right or wrong at a support or resistance area. People can firmly think it's going to stand up and they'll buy it there, or they can firmly think it's going to get broken and they'll sell it. Or, you know, people are really strong at their convictions at those decision areas on the chart. And what's happening is we have a lot of stocks that are not at those decision areas. They're just kind of in the middle of the range, which, you know, brings out a lack of conviction. And the other day I gave a list of a couple of them, and let's look at a couple of them and see how they have turned out. So like Johnson & Johnson was one. Expand this a little bit. You know, middle of the range. There's monthly resistance. Here's weekly support. It's kind of stuck in between them. You know, no decision really being made on that stock. Okay. AMD was another one. Middle of the range. Not at resistance, not at support, just kind of floating around. Facebook. Same thing. Middle of the range. People have convictions here. Like I'd have conviction if I was to get some type of a short indication, I would go short here with conviction. And I could be wrong, but I would do it with conviction. Down here, if I got the proper trigger to buy, I would buy here with conviction. And I could be wrong, you know, but I would do it with conviction. I couldn't convincingly do anything here. I mean, there's a lot of day traders that trade momentum, and you're just looking at bar by bar for the day to see which direction to trade. but you don't represent, day traders that trade that way don't represent the largest players in the market. The largest players in the market make their decisions and scale into their positions at major support and resistance areas. So I think there's a lack of volume, a lack of participants in the market, and a lot of cash sitting on the sidelines, which has given us not a lot of movement intraday on our trades, but it's gapping up pre-market. So that's just a theory. I could be wrong about that, but this is what I'm finding on the charts. I mean, Apple, for example, is another stock that I feel is in the middle of the range. You can't be convicted to what to do here. It's gone up a little bit. It's gone sideways. What do you do? I mean, if you're watching this video, how would you trade Apple based on this? You know, if it came down here, maybe you'd buy it because you have a buy bias and you think that this continuation of the upward move is going to happen. It's on sale down here, you buy it. There's conviction. If it's up here, you think that long term it's going down, you jump into a sell. If you get a trigger, it's conviction. What do you do right here? Like, as I look at it, unless I was day trading some type of momentum strategy, I don't really know what I would do with it. It's in consolidation. It's in the middle of the range. It could go up. It could go down. I don't know. So, you know, I think there's a lot of players in the market that are like that. Now, earlier, Marvel was on my list, but I think Marvel hit its resistance area. And, of course, it's not going to show up. Did I just lose internet connection? It says invalid symbol. Marvel? Sorry, y'all. Okay. This is an example of one. When I did the video last week, Marvel was in the middle of the range. I think it was somewhere in here. And see, it hit its resistance area, and then you see there's a reaction there. Now, the polarity of this market is still up. So if you traded, if you sold this, which I wouldn't do, just selling it right here just to sell it. But if I was a day trader, I could have, and you would have probably made some good money. But I swing trade off longer time frames. So for me, this market is still up. But if I get the proper trigger here, you know, it breaks down far enough and retraces back, I might look to go short here with conviction. But it's at an area where a decision typically gets made. You know, so this was an example of one that was on the list last week that actually made it to its resistance area. But there's a lot more that haven't. See, here's another. This is Micron, and it's in the middle of the range. And there were a bunch of them, even in cyclicals. Target, middle of the range. Best Buy, middle of the range. And if you watched last week's video, you might feel like you're watching a replay because this is the same thing I said last week, but it's the truth. The polarity is still up on these charts, a lot of them, but they're in the middle of the range. So if you're looking for a turn, you kind of want some type of confluence of events where a lot of different charts are landing at their resistance area at the same time to turn the market. And I don't think that's happening. You've got some at the resistance areas, some in the middle of the range. You know, some places, and there are stocks individually within this market that are actually bullish, and their support and their support levels on a monthly and weekly level are at the bottom. They're bullish. So even those you want to buy, but a lot of them are not at their ranges either. So it's just, there's a lot of indecision, a lot of lack of liquidity in the market right now, I believe. So that's just one of those things. And then if we're going to be revisiting things that I did before, here's a Newell brand. They announced, I think they had earnings yesterday or the day before. Maybe it was yesterday because we look at this drop. But this is one of the first charts that we broke down and talked about long-term support resistance. And so we had this weekly support put in here when we had done the video, but it ran into monthly resistance. So it hit resistance area and it reacted, came down, touched the weekly support. If you remember, I said I got long here, but I said that we would run into some type of resistance probably because monthly time frames typically trump weekly time frames. So this bounce off of a monthly time frame, once the market retraced up about 61%. Now it was aided by news, but you know, you've had a drop. So now the decision becomes, is this support area going to hold up or is it going to break to the upside? You know, and this is what you watch for this, but this is just an example of how the decisions of what the market's going to do happens at specific zones. There was, you know, this area right here, there was a change in polarity. You could sell here with conviction. This market came down to this support area that was previously identified. Remember, these areas are identified before price gets there. So this was identified. You got the proper trigger. You can buy it with conviction. You could be wrong, but you could buy it with conviction because this is the area. This is a 61% retracement of the down move, and if the monthly direction is down, a bounce off of weekly support should fail against monthly resistance, right? So if you were to put a fib on this deal, and here's the 61% level, look where the market stopped and turned. And it broke the low. Monthly resistance and energy should be higher than weekly support. First time you touch weekly support, it stood up. Second time, penetrated. Now, if the market truly is not going to make a new low, it's going to fail here. You'll get a trigger, and then you could buy it up with conviction. You see? So the market moves from zone to zone, and the market typically is bought and sold at major support and resistance areas, and that's what determines what direction it's going to go. But with a lot of stocks in the middle of the range, there's just a lot of indecision in the market. There's no confluence of everyone buying and everyone selling. And we actually saw this when there was capitulation in December around Christmas Eve. The market collectively all jumped up together. So the run has been, has been humongous. I mean, we've gone 8 weeks straight up. And a lot of the stocks have traded the same the entire time. It was in tandem that everything went up at the same time. So, but right now they're not all reaching their resistance at the same time. They've traded differently on their way up. Some of them are at resistance and some of them are not. So, I don't feel good about buying a V bottom historically. I don't feel good about buying a V bottom reversal at a resistance area. I think there's probably a 20% chance that this thing continues to run up and make a new high. It's probably 70-80% chance that we're going to see some type of reversal. It doesn't mean that we're going to go make a new low because there's support down here. But buying at this point is just dangerous. And I think a lot of people know that, which is why no one's buying intraday. But the market's continuously going up because there's not a lot of volume, but it's just chugging its way up. So it's a tough month to trade it. It's not acting like you would think that it would, but the market never does. So we'll just keep watching it, seeing what it's doing. Polarity still up, direction still up. It's at resistance, which means for me, there's just no trade. Stand on the sidelines, not losing money is a good way to go. So I think that's about it. This is a short video this week because it seems like I'm making the same video every week. So I will show you, last week we talked about charts that, or maybe it was 2 weeks ago, that put in support areas at our current levels because the market went sideways when the resistance area, the blue lines, the weekly direction was down and there was resistance here. I said that when the market reached there, we went sideways for so long, some of the weekly polarities for some of the stocks changed to up and they put in support in this area. And I'll show you an example of that. Let's see, I traded... now I can't remember the name of the stock. I should probably forget the name of this stock because every time I trade this stock, it takes my money. Without fail. I don't think I've ever won on this stock. Chesapeake Energy. And I think I showed you guys an example last week. So this thing it consolidated and went kind of sideways for a while, and then it kind of went to the upside, and the polarity changed to a up direction for me on a weekly chart, and I put support here. And of course, when it came down to support and I got my trigger, I bought it and it failed immediately. Okay, so typically for most of the charts, the support areas are down here, the resistance is down here, like all the charts that I showed you. This one actually put in support at these levels, so I traded it, and of course it failed and I lost the trade. Good money management, didn't beat me up too bad. I might have lost, I don't know, 1/3 of a percent or 0.5% or something like that on the trade. So I size my position sizes based on the size of the trade. So it didn't beat me up too bad, but I lost the trade. But contrarily, the Disney trade, day before yesterday, the opposite happened. So it also put in support in this area. Price came down off of monthly resistance, and the support held up, and we went back up. And I probably shouldn't be showing you this, but I actually have an order set, a limit order to sell Disney going back down once it reaches a certain price here. So let me not lead you guys, and let's get off that chart. But so I swing trade, so I bought it down at support and I won that trade, and I'm selling it going back the other way as it's going up right now. So that's just how I trade. So there are opportunities to buy, you know, in this market. This one, Cypress Semiconductors is an example where monthly support and monthly resistance is in. I mean, monthly resistance support and weekly support are both in. The direction of this market is up. So I'm a buyer down here. So it doesn't mean everything's for sale, but it's just there's a lot of stuff in the middle of the range. So I hope next week we'll get some type of conclusion to the market to give us a direction, because it's really hard to trade what's happening right now. You know, you don't want to buy it in this area because you're in the middle of resistance, but there's no sign from the bulls that they're going to take charge and push this thing back down so we can go find out where long term it's going to go. So it's just kind of difficult to trade. But the steepness of this angle tells me that we're closer to the point where the price is going to reverse. Because whenever you get the angle this steep, similarly like this, when you get these kind of steep angles, it's really hard for the market to sustain those kind of upward pushes. And typically you get some type of breakthrough to the other side, and the polarity will change. And then once it starts, you know, it'll start to move. So that's my opinion on the SPY. That's where we're at with it in the market overall. You know, individual stocks, they're doing all types of different things. So, you know, you have to have good triggers and a good plan on how to trade them. So we'll wait and see how it goes next week. It's funny things happen on 4-day weekends or 3-day weekends. So we're closed on Monday. So it'll be interesting to see what happens on Tuesday as far as pre-market and where we gap up or down. I wouldn't be surprised either way. But that's where we're at with it. Sorry I didn't really give much more value on this video, but it's a really hard market to call right now. I hope you guys enjoy the rest of your weekend. Like, subscribe, and more importantly, please guys comment in the comment section. Tell me how you feel about what I'm telling you on the videos. I don't have a product to sell you. You know, I don't offer a course. I don't do any trading seminars. I don't do any teaching. You know, I am writing a book, and eventually I will offer the book on the channel whenever it's available. But you know, I'm not doing these videos for the book. So that's more of a function of I'm back into trading, and it's the thing I love to do more than anything, business wise. So I just love talking about it. So please, if you can, give me some feedback in the comment section. Talk to me. Let me know what you think about what I'm saying, and if you think I'm a complete idiot, that's fine too. But just talk to me. And we'll go live next week again. I will announce that on Twitter at what time. So follow me on Twitter so you know when we're going live on the videos, so that we can evaluate your charts. We had a real good live session on Thursday. A lot of people showed up. Well, not a lot of people showed up. That's wrong. People showed up, and they gave a lot of different charts for us to look at. And we went through at least 5, 6, 7, 8, maybe 10 charts of different things. And I was able to break them down and give my opinion. We went an hour and 20 minutes. It was great. So more people in those videos would be really welcome. So I'm going to stop holding you hostage. You guys have a wonderful weekend. I'll talk to you soon, and have a good one.